Well, Asian markets, they are trading mixed this morning. Investors await a new round of high-level meeting between the United States as well as China spokesperson. That's set to begin later this week. So let's pull up a couple of indices. The Nikkei is a relative underperformer today. That's sitting with a cut of around 0.3%. The dollar yen, well, it was moving to around 110 odd mark. Now it's holding at around 109.3 odd. But nonetheless, that developed market, that's the Nikkei, that's the only one in the red actually, because the Kospi, the Straits and the Taiwanese index, all of them were trading with some green the last time I checked, and they continue to trade with some green. The SGX Nifty comes up for you on the screen, and that's indicating maybe after the big sell-off that we saw in Friday's trading session, 15 to 20 point bump up is what we could brace ourselves for.
Okay, so that was about Asian markets, more or less in the green. But on Wall Street as well, the markets ended higher for the fifth straight week. The longest shutdown in US history ended, but the uncertainty is not over, with the government will simply be funding this particular thing temporarily through February 15, while the border wall funding negotiations continue. The Dow Jones closed higher by 184 points. The S&P 500 also rose nearly 1%, while the Nasdaq Composite gained over 1%. CNBC's Josh Lipton gets us a wrap of all that transpired on Wall Street on Friday.
For CNBC TV 18, I'm Josh Lipton. U.S. stocks finishing higher for the fifth straight week, thanks in part to the short-term funding deal ending the partial government shutdown. The Dow up 183, the S&P gaining 22, and Nasdaq higher by 91. Starbucks giving the stock markets a little Java jolt. The company, which issued its latest quarterly earnings report after the bell on Thursday, sold more coffee here and in China, a country where it now has 3,700 shops. Shares of Starbucks ended the day up nearly 4%. The news not so good for Intel. Shares of the chipmaker down better than 5% after the company reported lower than expected revenue for the fourth quarter and issued light guidance. Company continues its CEO search after former chief executive Brian Krzanich was forced out 7 months ago. And Nike and the MLB announcing a new 10-year deal on Friday. Under the deal, Nike becomes the official uniform and footwear supplier of the MLB beginning in 2020. The deal was originally with Under Armour. Nike now has rights to the MLB, the NFL, and the NBA. That's the action from the U.S. market. Now back to you in Mumbai.
Okay, on that note, let's also get in some market opinion from our experts from Nomura, JP Morgan, as well as Nuveen Asset Management.
The market is not going to just be satiated by soybean purchases and LNG purchases. The key here, you need those structural issues, and that's the word that keeps coming up. You need the IP theft addressed, you need the forced tech transfer addressed, you need the state subsidies, which create this unequal playing field addressed. That's my low delta scenario. The one thing that I do think is higher probability, and we saw some of this both with the Fed recently and then the Journal this morning, the thing that would really cause me to change my footing, because my overall footing is that this quantitative easing to quantitative tightening regime change is what triggered all of last year, and what's triggered the financial conditions tightening is if the Fed begins to speak again with regards to modifying their balance sheet runoff.
The market seems to love the newly dovish Fed, or at least not as hawkish as was first billed in December. If they're talking about it and they're perhaps leaking things into the press, there's a chance that they might announce something next week. Jay Powell, this will be his first January press conference. If he does decide to come out and express at least a sentiment that they're considering ending the wind down of the balance sheet, that again, along with the taking the rate hike off the table, the third rate hike off the table in the December meeting, will be a sign that the Fed is not looking to do as much tightening or as much normalization as it was just 6 months ago.
If tariffs get increased, I think the outlook is negative, 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 and specifically linked to earnings. And earnings at the end of the day is what drives, I think, price action. If the can gets kind of kicked down the road, which you're suggesting is another scenario, I think, yes, we could probably hold the current level, maybe go up slightly higher, not much. Again, we are basing our view that a deal gets done. Again, I'm not going to go into details at this point, but I think it gets done. And I think that does drive top line higher because, again, just look at one very simple headline. China says $1 trillion worth of demand or goods they might purchase from the U.S. You translate it into numbers, you're looking at about a 6% boost to top line growth, give or take maybe 2% boost to real GDP. So I know that that's over multiple years, but the market prices things in fast.
Well, turning our attention to Europe, most markets ended with gains led by a rally in technology shares. The UK FTSE was the only bourse to close lower. Investors in that region continue to remain focused on the US-China trade talks, as well as progress in terms of what's happening on Brexit. And speaking about Brexit, UK lawmakers, they continue to debate the amendments as the clock ticks towards Tuesday's vote. Now, momentum in Parliament appears to be building for a delay to Britain leaving the European Union and for rejection of any no-deal Brexit. Prime Minister Theresa May's government is reportedly looking towards putting a limit towards Ireland's border backstop, but Ireland not having any of it, citing the Good Friday peace agreement.
Every time they talk about maybe extending the deadline and the European Union saying, well, if you need more time, we can give you more time till the end of the summer, whatever it takes, that's actually not helpful, because our sense has been all along that the strategy was to go right to the limit, right to the very last weekend and bang heads together and get a deal. And what you see is Theresa May is still supporting a deal that seems to have less and less popular support. The idea that the backstop has to be a very short-term transition. The majority opinion in the UK seems to be moving towards almost a perpetual membership in the customs union, at least until this mythical technological solution to the border can be made viable. The majority opinion seems to be we don't really want to leave the customs union, but that's the hard Brexiter view, is that's the reason you voted for exit. So there's a fundamental disconnect here between the minority in the Conservative Party that is still seeming to call the shots on what Theresa May is willing to send to Parliament, and the view in Parliament that says this is still far too close to a sort of a hard Brexit than we or the English people, the UK population, is willing to accept.
Okay, let's just focus now to the currency space. The dollar off 3-week highs as focus now shifts to the Federal Reserve's policy meeting later this week, where the US Central Bank is expected to leave interest rates unchanged.
Well, turning our attention to the world of commodities then, crude oil prices fall after US energy firms added rigs for the first time this year, signaling higher crude production in the United States. Political turmoil in Venezuela also weigh on prices.
Okay, on that note, we'll slip into a short break on the show. Up next, we'll get you all the cues and news you need to know for trade this Monday morning. Stay tuned for that.